Fundable is a new platform that launched recently in hopes of taking advantage of the concept of crowdfunding. The idea, which was introduced when the Jobs Act was signed into law in April, is to allow startups to solicit the general public for investments instead of going through investors and traditional banks. Fundable believes it can help serious startups raise capital from anyone, both through rewards and equity. So at this time, we're going to bring in Wil Schroter, the CEO and co-founder of the company, to talk more about it. Thanks for being with us today, Wil.
Thank you for having me.
You're very welcome. A lot of people are familiar with platforms such as Kickstarter. So what is it that makes Fundable different?
Well, Kickstarter is a fantastic platform for creative projects. The challenge comes when you start to deal with startup companies. Companies can take on funding in a lot of ways. It can be equity, it can be debt, or you can have pre-sales or donations like you see with Kickstarter. The challenge, though, is that with Kickstarter, it's all donation or rewards based, which means it's either here's some money for this idea that I think is great and let us know how it goes, or maybe here's some money and in exchange you'll allow me to get some sort of version of the product, like a pre-sale.
Right.
That's great for most projects, but when you get into startup company funding, you need a lot more options. If you're going to start a traditional services company, for example, there's no affinity, there's no charity donation model that makes sense there. There's probably not a pre-sales model that makes sense, which Kickstarter doesn't make sense altogether. In that case, you're more interested in traditional ways companies get funded, through equity, through debt, through more traditional instruments. And so Fundable provides the entire spectrum. We provide everything from affinity and rewards, as Kickstarter does, but more importantly, we go into the more business-focused transactions such as equity and debt.
Well, let's get more into the details of really how it works, such as how much money can be raised. Does the whole amount have to be raised in order for any funding to go to the startup and things like that?
Yeah, there's no absolute minimum, although we tend to shoot for about $1,000 as the least amount of money a startup should raise, just because it's startup funding, and there's certainly no maximum to it. That said, it is all or nothing funding. So if the startup does not meet its fundraising goal, let's say its goal was $10,000, if it doesn't meet its fundraising goal within a certain period of time, usually 30 to 60 days, which is chosen by the startup, then no cards are charged, no commitments are followed through, and this startup goes on its merry way, and as do the backers. However, once the startup hits its threshold of, say, in this case, $10,000, it can raise a maximum amount it wants above that threshold.
It's very interesting. Well, but because crowdfunding is such a new concept, the SEC has yet to set its rules for it. So do you foresee any issues or additional regulations from them?
There's two pieces to the Crowdfunding Jobs Act with the SEC that are particularly important to startups. The first is the general solicitation change. Prior to the Jobs Act, you couldn't actually do a general solicitation to the public, meaning you couldn't publicly say, I'm raising $10,000 and I'm going to give up 10% of the company to do that.
Right.
That meant startups were relegated to friends, family, or personal acquaintances in order to raise money. The second part was who qualifies as an investor. Typically, you could only have accredited investors, which required extremely high net worths for the average person, being $250,000 to $300,000. So here you have a situation where startups can neither tell anybody publicly about their fundraise, and if they do, they can only raise from a very small number of select people. With the new Jobs Act, you can actually tell the entire world that you're fundraising, and you can raise from people at just about any amount. That said, the Jobs Act, while signed, isn't fully enacted yet. The SEC was given 270 days, so about 9 months, in order to make all the rules that would allow this crowdfunding to really work the way we're thinking about it. And even then, we're not 100% sure whether they'll make the 270-day deadline.
Right. All right, so a lot of questions that could potentially happen there.
Correct. Oh, absolutely. And so we're watching it closely, but there's still a lot of opportunities for startups to get out there and raise money in traditional means. So right now we allow them to use the rewards-based model. So we've already had a company get crowdfunded in 72 hours just based on pre-selling their product. You have the donation-based model, which is, hey, there's a fair amount of people, friends and family, that may want to contribute to the effort just because they like you, which happens a lot in today's startups. And then, of course, we've got the equity-based model. But for the time being, the equity-based transactions essentially have to happen off-site. Investors can contact our startups about equity transactions, but they can't actually complete a transaction until they go off-site.
All right. Well, Fundable launched with 5 specific startups. Can you tell us about these and how they were chosen?
Yeah, we actually talked to thousands of companies over about a 7 or 8 month period, which really gave us a sense for one, how many people really needed help. I mean, the need for startup funding is just extraordinary. Also, how many types of deals there are. We met just as many people that needed $10,000 as we met people that needed $1 million. And all the ways that they were getting it funded were very different. The first 5 that we selected, we wanted to start with what we'd consider pretty modest, achievable raises. The average raise was about $25,000 for a target. We were also looking for different types of businesses. So we have a few product companies in there, we have a few technology or web companies in there, and we really wanted to get a sense for how they fared differently.
That's really, really interesting. Well, the company said that it launched with these 5 really in order to allow adequate time for each of them. But will there be limitations in terms of the number or the types of startups that it will accept going forward?
In some cases, yes. There has to be a reasonable goal for crowdfunding. So if you're saying, hey, I need $40 million to launch my new airline, it's not going to be reasonable for a crowdfunding. If we can't figure that you have a market that you can address quickly for your product, in other words, if you say, hey, I've got this great new product, it's a new iPhone competitor, and I have 5 of my friends that would want to buy it, but I don't have anybody else that I could reach out to. I don't have any other friends on Facebook or LinkedIn. I've never used Twitter, etc. That's to us a pretty unfundable project because we can't do the marketing necessarily for you. We can help you, but really it's going to come from your core audience and building off of that.
Right. So right on that note, is there a stereotype for what types of businesses do especially well through crowdfunding?
Sure. What's happening right now is you're seeing consumer products company doing extraordinarily well. You saw a lot of that activity on Kickstarter with things like the Pebble Watch and a couple of weeks ago with the G-Tar. We had a product that I mentioned called the Training Mask, which was high altitude simulation sports equipment, which sold through its audience in 72 hours to hit its goal. We're finding that products in a pre-sale environment do exceptionally well, but we haven't even started to find out how well equity does. So that's kind of an uncharted area for everyone right now.
Mm-hmm. So what can businesses do that want to fundraise through Fundable?
The first thing is to find a milestone goal that you think is particularly useful. For example, you may ultimately need $2 million to start your business, and that's fine. But what can you do right now with, say, $10,000 or $50,000? We try to work with the startups to find smaller, bite-sized, achievable goals that can get them on their way. That way they don't set themselves up for failure. They don't say, hey, I need $2 million and no less. And they've raised $100,000 and it looks to the backer community like they've only raised 5% of their raise. Like we want to make sure that they've done a significant amount of homework and trying to find a good, small, achievable milestone to get ready.
Absolutely. Well, how big of an impact do you think that crowdfunding and specifically Fundable will have on both the startup community and the economy?
I don't think that we've even begun to scratch the surface for how big of an opportunity there is. I'll give you a sense for this because this is particularly important to us. Right now, there's 6 million companies per year that get started in the US alone. In order for that company to get started, in order for it to be successful, they do need some access to capital, whether it's early customers, whether it's investors, etc. The lack of access in today's market means that only 6 million companies could have gotten started. With all these new access models through donation-based, through pre-sales, through equity, through debt, through all these new ways that companies now have access to capital, I believe we can double that number. And if we get to 12 million businesses started in the US, if 6 million was as far as we could get with one of the greatest economies there's ever been, imagine what this country will look like with 12 million.
Absolutely.
And I think this access to capital will not only give more people the opportunity to start businesses, it'll inspire more people to say, hey, you know what? I had an idea. I would have never thought of trying to make it a go as a business before, but now I will because I can raise $10,000 to get started.
That's a great goal. Do you see crowdfunding affecting traditional forms of fundraising? And if so, do you see it as a positive or negative impact?
I see it as a huge positive. I think that whether you're talking about seed, angel, venture investors, if you're talking about banks, etc., right now they're funding by far the riskiest part of most startups, which is just that early stage, get the idea out there part. It's great that they're doing that, but it's a terrible use of their capital. Instead of raising $50,000, let's say even as a bank loan, instead of raising $50,000, going to build your prototype, doing a bunch of marketing, and then finding out if anybody would ever buy the product, now you can actually present your idea at the idea stage to a huge audience and say, would you buy this? Does it make sense for me to take out a $50,000 loan? Or said differently, will you help me avoid taking out a $50,000 loan? Now those $50,000 loan notes can start to go to companies that are growing, not just on high-risk ideas that maybe should have never been built to begin with. I think we're going to fundamentally change how capital gets used, and I think it's great for everyone.
That's a very good point, that it can be used in a whole lot smarter areas, basically.
Absolutely. Absolutely.
All right, well, what else can we expect from Fundable in the coming months?
Well, right now, again, you're seeing just a small handful of the projects that we have. We have hundreds of other companies that will be added to the mix, but we really want to focus on a small number right now, work them through the process, get a lot of feedback, and learn how to expand the offer. What you'll also see over the next few months is, as we expand into the equity offers, you'll start to see an area where accredited investors and everyone later on can start to dig in and find out what equity and stock options are available for these companies.
All right, exciting times ahead. Thank you so much for talking with us, Wil.
Thanks for having me.
You're very welcome. And for more information on this new crowdfunding platform, visit fundable.com. Reporting for WebPro News, I'm Abby Johnson.